Hi, everyone. How's your summer going? I think it might be August, mid-August. So we're rolling along here. Is everybody ready for fall? Okay, autumn, right? Autumn. Okay, so hey, some of you have been here many times, so I'll just browse through this very quickly. Silicon Dragon Ventures, that's your resource for everything we're doing, except for maybe a few important things which I'll announce later on an upcoming show. But anyhow, I will announce the new book, The New Tech Titans of China. It's going to be published early 2026 from my publisher, Hachette in London. So I'm very happy about that. It's in progress in production. So you can see the cover right there. And just to show you how much has changed, if you look at the subtitles, the first one was 2019, how China's tech sector is challenging the world by innovating faster, working harder, and going global. The new subtitle is Innovation Under Pressure in the World's Greatest Economy, Most Ambitious Economy, Most Ambitious Economy. This is 2019, this is 2026. Couldn't be more dramatic change. So stay tuned for that. Okay, as I said, our Silicon Dragon Ventures.com and our partner in this series, Invest Hong Kong. And yes, okay, now I need to also tell you about Sue, who I've known for quite some time here in Silicon Valley and the Palo Alto circles. So she's an early investor and likes seed and Series A deals, and she likes to scale them up to unicorn status. And she's worked on 45 startups that have gained a lot of valuation, including 2 Stanford spinouts. She has a PhD, 3 patents. She's a graduate of University of Utah. How about that? And postdoctoral fellow at Stanford. She went through the executive program at the Graduate School of Business at Stanford. I just saw her at Stanford at the Asian American Achievement Program, which was phenomenal. And now I'm going to tell you a little bit about Amino Capital, which changed its name from Z Park Capital. Z is apparently not good because it's last, right? You might as well go with A.
Yeah.
Amino, right? So the firm has East-West ties. It's very immersed in the China, US circles of technology innovation. And that's kind of a sweet spot of what a lot of us are doing. It was founded by Larry Lee in 2012. That's actually not that long ago. By tech and business executives from China and the US. In fact, a group of 29 executives. So I'd love to hear more about who they are. But some of the notable successes are Chime and We, the fast food delivery. I've yet to try that, but I really want to. Rippling, etc. So yeah, it's quite interesting story of fundraising, and we just are admitting one more person in. Um, and series of progressively larger funds. They're on Fund 4 now.
Yes.
Um, and yeah, we'd love to know a little bit more about who those 29 executives are who are funding Amino Capital and all its successes. So anyhow, get your questions ready. And we'll go with Sue now. So, all right, everyone else, you can turn off your video for now, unless you want to ask a question. Sue, it looks like you're in your office, huh?
Yes, this is
Okay,
office at downtown Palo Alto. Yeah, thank you for having me, Rebecca.
of course. I think you're the neighbor of one of the people who was on who was a participant in this show.
Yeah, it's the best place to spend
Yes,
summer.
You're right there on the same street, right, Hal? Okay. Well, let's get started.
one
Sue,
block over.
One block over. Okay. Um, Sue, tell us about yourself. How did you get involved in venture capital and technology and get a PhD? Tell us about yourself.
Thank you so much for Rebecca having me. I'm here because I believe AI and data can still elevate startups, but also humanity. Especially, I was giving a really interesting talk at the United Nation during UNGA. Later, I mean, almost coming up this year, right? So that was last September. And then I didn't realize they invited me to UN and then talking about humanity anti-trafficking. And then I suddenly realized, oh my God, we had a company which is called Chime Bank that we backed when we first got started in 2013. And that company, we invested pre-revenue, pre-product, and they just got IPO a little bit like 2 months ago with
Uh,
$15 billion market cap. It was crazy. And then how it helped humanity. They are online bank, right? So Chime Bank, Chime Financial. But they started with serving those unbankable people. When I was at UN, and then they talk about anti-human trafficking. A lot of the people, donors, were from Houston because that's the backyard. It happened in their backyards, human trafficking. So they donate a lot of money, but think of those people, survivors, and they trafficked to the United States and they had no bank account, they had no social security. And then how could they save their money? Chime Financials. So this is a great story. That's why I wanted to not just keep this to myself. I wanted to share with Rebecca and your awesome audience. So
right. Well, what was this? How did they grow up so fast? And they started in Silicon Valley or somewhere else?
they started in San Francisco, and
Okay.
they actually knock on doors of all VC on Sand Hill. That was a story covering this.
Oh,
They actually asked Sequoia whether they want to invest in them, but that was in 2013. And then we invested, as first money, right? And then we really wanted to see, tier one or people that raise billions of dollars
uh-huh.
investing them. But back then, interchange fee wasn't even a business model, and neo banking wasn't even a domain. There was no such word. So I think as early stage investors, as you mentioned, we are passionate about early stage, seed, Series A, Series B. Those business model not proven, but what's proven? Data. Data is proven. We make sure that all company that we invested along the way, they will accumulate data. So once you have the data, that is your real mode. Our founder, Dr. Chu, he joined Google year 2000. So if you compare Google and Bing, do they both have awesome technology page rank? Yes, they do. But if you are a Chinese people, I grew up in China. If you are Chinese people selling furniture in the United States, will you spend a simple like penny on Bing for advertisement? Not at all. Why? Because Bing, if I spend money on Google, they have user data, so they will push to the people that needed furniture most. But because Bing, they don't have user data, then the conversion rate is really low. So that's why Google had over 90%, even 95% of, it's like Down syndrome, Down syndrome genetic testing is absolute position over dominating position in search. So that is why I feel like, we want one thing which is very, very certain under such uncertainty, which is data. I think this investment theme not just apply in 2013, but also apply now.
Right. Okay. So they were going after the unbankable, and were those people, where were the unbankable?
Unbanked people without social security card and students who just came here on
In
F1.
the US?
Yes, in the US. And then,
Okay. So
yeah,
not really an Asia connection then.
the founder, it's very interesting. If you look at Chime Financial, their logo is actually in grain. So they're Irish. They're not Chinese.
Okay. So do you prefer to invest in Chinese American founders or Chinese founders?
We have no preference, but we just treat them equal. But the thing is, because I grew up in China and then I play with all these Chinese immigrants in the United States, so we definitely see more deal flows for Chinese people. And then, what's interesting is that a lot of the GSB grads, Stanford grads, a lot of them are Chinese people, but they still want to start a company, right? Just like the old days.
Mm-hmm.
But where do they want to start a company in the United States? Because
Mm-hmm.
a lot of them, they wanted to take advantage of a large language model, and then they wanted to access to the distribution channel globally. So Silicon Valley is the only way that they can do that. So that is why we see definitely absolute majority number of Chinese Americans starting company in the US. We just see more deals. So, but we treat them equal. If you look at our companies that we invested over 300 companies, pre-money, pre-revenue, and then it's diversified, very diversified background. But if you look at our company that actually eventually became unicorn, almost 20 of them, right? Like we were first money into We, the Asian grocery shopping, and founder originally from Shanghai, 交通 University, right? So Larry Liu. And then we were the first money because we were the first user of their Asian version of DoorDash. And then I think it's just like Chime Bank. They also target the underserved community, which is the ethnic group. Like they serve not just Chinese American, they serve Korean American, Japanese American, Filipino, and then Mexican, Indian. So they have designated language store of their own ethnic group. So this is totally underserved. If you go to DoorDash, if you go to Postmates, they don't have a specific for just this ethnic group. So that's why, our investment theme in terms of consumer internet is very interesting. So number one, you want to take advantage of next generation technology, the most advanced technology. And number two, you wanted to target an underserved community because they have no other choices but you. And then once you already became so good in that specific domain, in that specific cohort of people, and when this problem became ubiquitous, and you're the one which is ready. So that's why Chime and they became unicorns.
How many of them have this kind of heritage of the Chinese American startup founder and leveraging the Chinese American or the Asian American community to scale up?
I
How
think,
many?
yeah, I think Asian is unicorn wise just one. We have almost over 20 unicorn, but it's just
Okay.
one
But
unicorn.
how many of your portfolio companies overall, not just unicorns, but how many of them started out this way with this kind
I
of
would say
heritage?
it's very, very hard for Chinese American, especially those who actually came here from
Mm-hmm.
college.
Mm-hmm.
So they finished college in China,
Right.
Tsinghua, and came here to start a company. It's very,
Right.
very difficult. It's very, very difficult,
Sure.
actually. So we will look at almost a lot of them, but when we invest, we usually, do not invest in a team that actually just have Chinese people because I give you examples, very funny, right? So if we see such kind of team, we want team to have a diversified background, not just people from China. Whole team has like CEO, CTO, everybody from China. That's not good. That's not good. So we wanted to have a diversified team. So that's very important. I give you example like
Why is that not good to have an all Chinese team? I realize maybe there's geopolitical issues now, but what else?
Oh, it's not like that. It's I think it's because of I mean, for the second gen, people that actually born in the US, they're Chinese American, but they don't consider them as Chinese, right? So they just consider themselves as American, right? So those totally different. I mean, immigrant wise, if I give you an example, so there is this like consumer internet team. So there is this like three. three Chinese American. I mean, they actually grew up in China, and then they're pitching to us. It's very funny. So there were two of them. So it's a it's a social network vacation. And then so there are three of them. Two of them actually from Meta, and one of them from a company that actually in material science. And then ask them who is the product manager. And then you would think the person actually work at Meta is the product manager, right? But the fact is that the guy, he is actually in material science. He is the product manager. So it's interesting, right? Because if you look at this profile of the other two engineer, they are the info person at Meta. They don't deal with product management. So there is a big hurdle. So if you're at Meta, if you want to become a product manager, not just you train as a computer scientist, you have to sometimes go through Stanford GSB to actually pivot to become a product manager. But for people that actually grew up in the States, it's very natural for them to become a product manager. So that's why. So it's not because, oh, geopolitical. No, there's no geopolitical. There is like people that already um, there are CEOs actually doing this very well, and they're so smart, but they know how to team up with other people by nature. I think as a VC, we invest in business. So in the whole world, what's most sustainable? Business is most sustainable. So if we want to have a sustainable business, we should actually look at their potential revenue, go to market. So it has to have the functionality of the best in your team rather than just the ethnic group. Yeah.
Okay, so let's look at your portfolio as a whole then. You have these unicorns, but I'm interested in like, how many of them are fintech? How many of them are consumer net? How does it break down? What categories have you invested in?
So we invested, so from day one, our investment theme has been data. And then just as I mentioned, so
But
we
you can't, I mean, you could, that to me, that doesn't mean too much. You say your investment theme is data. Well, that could be anything. Can you be more specific?
yeah, so we invest in anything. So because data, yes, yes, we invest.
Okay, you
So if
mean
you look
anything
at
that uses data, which is everything. So, I mean, how many fintech startups do you have in your portfolio?
so our investment theme is actually data, big data as mode, and the network effect as a growth factor.
Okay, and
Means
how
that
does it break down by market sector? Fintech?
so that means that if so in terms of a market, so we actually invest in consumer internet. Like for example, recently in 2018, we invested in a company called Rapid. So back then, Rapids, you can say, I mean, it's hard to characterize them, right? So you wanted to define a sector rather than, oh, I wanted to invest in, this code generation large language model company. Well, that would be too late, right? So in 2018, I mean, now Rapid became a $3 billion company, and they are the so-called, signature company of vibe coding. So it most like they invented the word vibe coding. So their $3 billion company, even 4-year-old little kids can use natural language to actually create a more like a small game. They don't need to know how to code, right? But in 2018, when we invested in them, there was no such word called vibe coding. There was no large language model. Large language model started in 2022. So how do you characterize rapid? So people ask us, "Hey, Sue, what's your favorite company in your fund three, in fund two?" And we were like, "Oh, Rapid." And they were saying, which character is Rapid from?" And we were saying, "Let me think, maybe education tech, because Rapid was an IDE platform online." So back then, if you're little kids and then if you want to learn how to code, you don't want to download all the database and everything on your laptop to set it up, an environment. You wanted to just like Google Sheet. You wanted to just open a cloud IDE and then started to code right away. So you don't want to set up anything. So Rapid is such kind of IDE. And then little kids can open it up and started to code. So we were saying maybe Rapid is an education tech company, right? And then we want our investment to define a character. And now in 2022, when large language model launched, and then programming languages is one of the languages, right? So rapidly, quickly, they rolled up a feature called agent for coding. So little kids can not just use Rapid as an IDE environment to code, but also they can actually use Rapid directly to
Mhm.
learn how to code, to just use natural languages to code.
How far along is this company? Is it still a startup? Or
This
is
company is a $3 billion company.
$3 billion company? Okay, so
Yeah.
that's one of your unicorns?
Yeah, so this is one of our unicorns. So we have almost the 20 unicorns.
How
So
could
this
you
is,
have 20 unicorns? You must, that seems like an exorbitant amount number.
yeah, we none of this unicorn we invested as for marketing reason.
Yeah.
So we invested these companies pre-revenue, pre-product, almost all of them.
Oh, yeah?
So for example, so I give you example of Chime Bank, give you example of We, I give you example of Rapid, I give you
Right.
example of maybe Webflow. So this is another category of our investments.
Mm-hmm.
So because you knew me when I was nobody, when we first met, that was 2012, right? I was just a postdoc and then from Stanford. And
But
now
I recognize the
here,
talent early on. I'm pretty good
yes.
at that.
We're good friends. And now, Midas, they actually use data to actually list the top 100 venture capital list in Silicon Valley. You
Uh-huh.
know who is on the front page? Larry Lee, our partner.
There. Yeah.
Yeah.
Yeah,
So
he's been on the Midas list, right? The
yeah,
Forbes
so he was
Midas
on the
list.
Midas this year, and then he was at the front page of Midas. And
Okay, so what were the companies that contributed to his Forbes Midas listing? Because
I think they actually contribute. So like Chime Bank,
yeah,
Rapid, we just talked about, and this is three of them. And we also have, this is a consumer product, and we also have SaaS category. So I think I mean, they didn't even count Larry's angel investment, which is Zoom. So Larry joined Zoom's first round in 2011. So you met us in 2012.
With Bill Ty and a few others.
Yeah, back then Zoom was tiny, right? So when you met us, so now Zoom, I mean, if you say Zoom is huge, and then right now, and then we also have, so they didn't even count Zoom because Zoom was Larry's personal investment before.
Right, I see. Okay.
So we also have a company like SaaS, similar to Zoom. We have Webflow, and we invested out of Webflow out of YC. And then, so when we invest in them, they were, angel round, right? And now they are $4 billion company. And then Rippling, we also invest in them out of YC. And then now they are $16 billion company.
Mhm.
And we also have Torin. Yeah. So
Is
this
this YC? I want to ask you about Y Combinator. So you got two of them, at least two from Y Combinator. What is the magic that Y Combinator has? Because I've been trying to get a hold of them, and maybe you can help me get a hold of them, because I need to invite them to speak at an event that I'm programming. So it's Gary Tan, right? He's the founder, right?
Yes, he's not the founder, he's the CEO right now.
The CEO. Okay, so
Yeah.
what is it about Y Combinator that's so great that you got at least two of your startups from there?
Y Combinator is the best, or I think one and only incubator because of the power law, right? So they have so many talents apply to be their portfolio, and
Uh-huh.
then they they actually, so it's like a Stanford. So you just have all this talent coming to you. And then it's been so many years, it's been over 10 years, and then they already established really good track record. And then I think that's one thing. So they have like DoorDash, they have Jobbox, they have Scale AI, they have Stripe, all the, company that's really great, right? But in the meantime, I think what's similar between YC and Amino is that we are both very data driven. Like in YC, they internally they have a Yelp for investors. So if you're YC alum, it's very easy for you to understand potential investors, their strengths, their process, their portfolio companies, and everything, right? So so they are very data driven. And for Amino, we are also very data driven. So we have our self-developed AI CRM for our internal use, and also LPM for our LPs, and founder space for founders to communicate with us. So if you nowadays, if you give me email, I can generate a due diligence report right away with just the,
Okay. So
so
what's your IRR on your first and second and third funds?
So that's I know that it's very consistent with 20 unicorn page front page of Forbes, Midas list. So our DPI for fund one is 2.1, and our TVPI is between 11.4 and 37 time return. Our net IRR for fund one is 38.2%.
Okay, I'm sorry, what was the last one?
38.2%.
Is that for fund three?
This is for fund one.
Oh, 38.2. Okay, okay. So that's totally invested. Fund two is totally invested. How about fund three is totally invested?
This is fund one. So the number was actually from fund one, and then from fund two is fund three was not. Fund two was actually totally invested, and it's already have 1.34 time DPI, 1.34 time of funds returned to LP already, and then TVPI is between 4.25 to 22.5, and between that TVPI. And also, yeah, so that's our fund two. And fund
Okay,
three,
you must be really good at math, the way you can just rattle that off. And with a very good memory. You've probably given this message to many LPs, right?
oh yeah. This is our baseline. So so
Okay, so
otherwise it's not consistent. We're having so many unicorns.
okay, so I still want to go back to my question of how in the world did you get 20 unicorns? Like how many in your portfolio overall?
So we have over 300 companies and
Over 300.
yeah, yeah. And then we also have about 30 to 40 company that's between 100 million to 1 billion. So those are the companies that actually are potential home run. And then we also have about 40 company which just has some angel money, haven't raised any price round, but they already have over $1 million ARR. So if they raise in a very good year, it could be easily become like 50 million to 100 million, even more. So it depends on the years. Sometimes SaaS company has, really high PS ratio. So those company are the potential breakouts, and then we will be happy to do follow-on investment into those breakouts, because as early investor, we get monthly updates from these portfolio companies rather than waiting for the news. Because when journalists like you guys, when you guys got them, and then everybody knows they're great companies, so we wanted to got them before you got them.
Okay, so how many of them are Stanford alum
So I would say
percentage?
yeah, so I would say, we really like immigrants, right? So even at Stanford, so I would say Stanford, so in our internal system, we also have a scoring system. So Stanford has like 100 score, like really good, because a lot of the Stanford grads, they give us really good return. So once they give us really good return, our scoring system learns, so it will add up And then, so it's very important for our system to have the learning phase. And then we will say, I think Stanford, we definitely, it's like Chinese Americans. So Stanford, we see huge volume, but we treat equally to other schools, right? So we just see so many of them. And then I would say eventually Stanford took almost like, you know, 40, 50% of our portfolio company
Wow.
have some sort of a Stanford angle. Yeah.
What about Berkeley?
Berkeley, much less, but I'm very happy to let you know Berkeley eventually has so-called Berkeley Mafia right now. Because Stanford, you have Jerry Yang, you have Larry Page, Harvard, you have Bill Gates, you have Zuckerberg, and Berkeley now I'm very happy to let you know much more than before. Berkeley, I think because of the data breaks and also any skill, they both from Professor Aaron Stoniak's laboratory, which is called Skylab. And then I think during ML Ops, I think a lot of the VC, we got crazy about this laboratory and industry got crazy about this laboratory because they invented the Spark and so they actually invented a lot of open source projects, and then they have really good reputation in terms of developer community, and not just VC but also Google. I mean, Nvidia, Meta, everybody donated a lot of money into Sky Laboratory. So this is the gold mine. So Berkeley event finally they have Berkeley Mafia now. So
Okay,
yeah.
so what about Hong Kong universities or Tsinghua universities? The universities in mainland China, you would invest in alum from those universities too?
Those, Tsinghua and Panking University, those two university are considered same training standard as Stanford. You know what's funny? The other day I was at YC, and then at the demo day, there was this four UBC undergrads, and then so they all graduate from UBC. But during their presentation, they were saying we are a team from Tsinghua. And then
Oh,
I was confused, right? Because I remember I told you about the one, the due diligence. I was looking at it, I was like, four of you guys, all from UBC. But I was confused. And then end of the day, I was talking to them, and it turned out that one of them did a summer internship at Tsinghua. So you can see that in the eyes of Silicon Valley VC, Tsinhua's education in terms of computer science is equally good as Stanford.
okay, interesting. And you would invest in them. You don't have any guards against that?
Why? They are the best.
Okay,
Yeah, I told you like a lot of the Chinese
but
students and from Stanford.
geopolitics keeps interfering and causing problems. So in terms of what you can invest in, but you could
Well, they,
invest.
they they didn't do anything illegal. I mean, they just want to start a company in the States.
Okay, so you're investing in them as they headquarter themselves in the US, right?
We have no portfolio company in China.
Okay,
Not a single one.
but what about in Hong Kong?
Not a single one.
Not a single one in Hong
Not a
Kong.
single one in Hong Kong.
Okay, I think Hong Kong has some work to do here.
Oh, Hong Kong is not really having a very bad position, to be honest with you, because Hong Kong is now have better attraction than mainland China for faculties.
Mhm.
So I've seen so many Stanford faculty member, a lot of them, they actually had the choice of going to Tsinghua, but they chose Hong Kong here.
Mhm.
So they definitely have better position. And Hong Kong dollar and US dollar are freely exchanged.
Mhm.
So Hong Kong stock market is actually very, very thriving these days
Yeah,
because a lot of the Chinese company, they cannot go public in the US. It's just as American citizen, even though I grew up in China, and then a lot of the companies, especially those AI companies in mainland China, they don't allow us to invest.
right.
And then I don't think, even though US government want us to invest, we are not able to.
Right, I know.
Chinese
It's
company doesn't want us to invest.
Right, it's off limits.
It's a regulation. It's a regulation because we are U.S. citizens, so you can't have a foreign shareholder.
I know.
Yeah.
Well, that's a relatively new change.
I think that happened to us since 2017, 2018, 2017. Yeah.
Yeah,
Before we're looking at companies that actually accept US dollar in China. We definitely look at them.
I see. Do you have any Chinese portfolio companies left in your overall?
But
They're all gone?
all gone.
So did you sell them or what happened to them?
First of all, it's hard for us to compete back then with the US dollar fund that actually in China, right? So like Zhen Fund or Sequoia China, they had a much better position. And back then, 2012, we're small. We're just 29 people's money. So it's very hard because in China, US dollar fund, they have much better position than us in terms of making decision and take a educated guess. Because for them, they will just ask a question like, "Oh, you're a graduate from Stanford. Yeah, you're a great team. I can invest in you, but how about the business? Oh, the product has a US equivalent, and we have a great firewall. So okay, so you have these two factors, right? You have the best team, and then you already have US equivalent, and then okay, so Silicon Valley comparable. Okay, I can invest in you. So it's more educated guess for them, right? So they have more odds. So that's why Sequoia China, they have been on the Midas #1 for so many years. But in the US, when we invest in Chime Bank, and then they also went to Sequoia US, but they said no. And when we invest in Chime, I mean, when Chime became $65 million valuation company, and then Sequoia said no. And they are 1.9 billion valuation in 2019, Sequoia said no. When they are $25 billion valuation, Sequoia said yes. But you can
So,
imagine if this is in China, Sequoia, China will invest in this Chime in China will be like seed, Series A, Series B, Series C, because
yeah,
they already know the answer, of course.
yeah. So
It's
your data, I was interested in how hearing how you explained your driven approach to evaluating a company. So I'm just thinking about what about the personality of the founder, the culture of the founder, just how expert they are, how they impress you beyond the numbers. You look at things beyond the numbers.
I think for how do I say, for valuation, there is always like it kept going up, right? So we're very friendly because we learned it in a hard way. Because valuation is up on negotiation all the time. So we don't fear high valuation. It's not a problem. It's just like a bubble, right? So Silicon Valley bubble is a necessity. If there is no bubble, there is no bubble burst. If there is no bubble burst, and nobody think it's a great time to buy in. So if there is no buy-in and there is no growth, another bubble. So bubble is great because without a bubble, there is a huge supply problem. If there is no bubble, professors, top talents, they wouldn't want to come out and start a company. Bubble is a necessity, but the question for VC really is when the bubble bursts, your investment will be the next Google. That's our goal.
I see. So you often invest again and again in a company that you scoped out early on, and then you keep investing in them. It
We we
sounds
we
it
hope
sounds
we
like
hope
that's
so.
the strategy. So, but you got to find these gems that are kind of hard to find. So how do you source them? I mean, I guess you go to demo days and things like that, and you go hang out at Stanford and you hang out at Berkeley, and they come to you. But is there any other secret way that you find
Yeah,
these
our investment
gems?
strategy is called GSD. So G represent Google, so Google ecosystem. Because our partner, Dr. Chu, he joined Google year 2000, and then he not just joined Google very early, he also started Google image search. So he has very good reputation. And then he invented Google image search now, which became the first milestone of Google's AI development. And then the second milestone Google laid out was in year of 2009. 9 years later, Professor Fei-Fei Li started ImageNet, which is market competition using computation of algorithm, and telling stories out of pictures that searched by by Google search, right? So Google image. And then in 2017 is Transformer, which laid out the foundation of large language model for Google. So that's why Google is just the one company, but we have 29, now 80 LP who are also our venture partners. We have the first Chinese at Google, first Chinese at Facebook. We have a lot of really good money, really smart money that invest in the fund. And they also became our eyes and ears in those large technology companies. And S represent Stanford ecosystem because we give back to Stanford. And then our office right now is at Stanford Palm Drive and University Avenue. And we always have students coming to work with us, faculty member to work with us to start their venture. So a lot of them register in our office. So we actually have very strong Stanford community, but this is also just a symbol, right? So we also invested in the best talent in the whole world: Tsinghua, Peking University, Oxford, Cambridge, University of Toronto, and Princeton, and Berkeley, Harvard, MIT. We go to those universities very often. We talk to professors, and it's just so enjoyable to talk to people like that. And GSD, what D represent is data driven. So we believe next Google has to have unique big data which have not been collected and analyzed before. So even though those people who doesn't have Google background, who doesn't have a Stanford background, but their product, we source them on the internet, and then we believe they could be the next Google because of the unique data that they are crunching. We also invest in them. So this
Okay.
is our strategy.
Who are some of your initial investors? You said you had a group of 29. And
Yeah.
do you have any like David Wei of Alibaba or anyone like that?
No, David Wei Alibaba did not invest in me.
Okay, who's invested?
So David Wei, but you mentioned about David Wei. David Wei of Facebook invest in us.
Another David Wei.
David
Okay.
Wei, yeah.
Okay. Oh, okay.
So David Wei of Meta, so he graduated from Tsinghua, and
Yeah.
he not just graduated from Tsinghua, he was also the computer science Olympics uh, coach while he was at Tsinghua. And then
Oh,
he went to Caltech for his PhD. He joined Facebook very early. He's one of our founders.
okay. Who else?
He joined Facebook very early. He has been in Meta for 12 years, and 7 years he has been vice president of Meta. And then we also have Larry Lee. He started Amino Capital actually together with David Wei and Dr. Hui Ken Chu. So Larry Lee, he was on the Midas. He was angel investor of Zoom. And then he graduated from Tsinghua, and he came to University of Florida, and later he worked at his first job is at the Wells Fargo. And then and Dr. Hui Ken Chu, he joined Google year 2000. So those are the people that we put money together. Yeah.
I see. So you have any executives from the FANG companies besides the ones we already talked about? Facebook, Amazon, Netflix, Google.
Yeah.
How about any of the Chinese tech companies like ByteDance, Baidu, Alibaba, Tencent? Are any of those people?
No ByteDance, no Baidu, no Alibaba, no
No
Tencent.
executives from those companies. That's too
No.
bad because they could really contribute a lot, I think. Um,
Yeah,
okay,
it's hard. It's hard to get their money because we were too small back then.
okay, but today you might be, well, today you can't get it, so forget it.
Yeah,
Okay,
I get it. I think it's back then 2012, right? So there was a Snapchat which went IPO, right? And
yeah,
then Magic Leap, right? So their $1 billion valuation round. So if you look at their cap table, Baidu, Alibaba, Tencent, they all were able to invest in those companies. Why do you want to invest in angel fund like us?
Right, okay. Okay, fine. Questions out there in the audience? I think Hal Kelman had a question about whether you had any fintech investments. Maybe you could just answer that real quickly. Do you have any fintech investments?
Our fintech portfolio was so great. We were first money into Chime Bank. It's a
Okay.
fintech company, is
Yeah.
$18 billion company.
Any other ones besides Chime?
Rippling, Rippling is a $16 billion company.
Okay, that's in blockchain or something, right?
Rippling is HCM and fintech. It's a payroll company.
Oh, okay. I'm thinking of a blockchain company with a similar name. Um, okay, what else? Any other questions, Frank or Hal?
How
Yeah,
about
hi.
SaaS vertical markets?
Okay. Any in SaaS vertical markets? Sue?
You ask, so SaaS is very interesting, right? So I would say back in 2022, so why investor crazy about ChatGPT? Not just because the demo is magic, but also because ChatGPT is PLG SaaS, because it monetized not by advertising, but by taking subscription. So back in 2022, the hardest meeting in Silicon Valley is called SaaStr. So we have great success investing in SaaS company, especially back then, so-called PLG SaaS. So as I mentioned, Webflow, they are PLG SaaS. They are $4 billion company now. And then Rippling, they are PLG SaaS, and now they are 16 billion. And Touring.com, and they are a SLG SaaS. So they are $2 billion company.
Okay.
So
Frank, what's your question?
Yeah, thank you very much, Sue. So my question is like, of the things you invest in, have you ever taken the lead? And my question is, because I'm in a startup AI company, is like, what are the responsibilities of a lead that differentiate you from just another investor?
yeah, so you're right. So for investors, so we do actually lead deals, and then oftentimes if you are lead investor, first thing you want to do is to do house cleaning jobs. So a lot of the things like early investors, they came in like even sometimes a party round, sometimes a angel round, and sometimes the cap table is not very clean or as
Mhm.
realistic as, because sometimes they have a co-founder and the co-founder later on didn't. So it happened very often that two best friends, they started a company, but their skill set not very complementary. So one grow to be a leader, the other didn't grow, or they even sometimes wanted to part away. And then as a lead investor, first thing you want to do is to rebuild the company. So we wanted to guide founders to actually from strategy, from hiring, from go-to-market, from product market fit. So we wanted to rebuild the company together with the new leadership. That's very important.
Mm.
So cap table has to reflect this. So house cleaning is the number one thing we come in as a lead investor. Of course, we're taking board seat, but those are not important because we're not trying to control anything. So I don't want, so we don't want it to be, so we don't want the company to be driven by investor. We want the company to be driven by the founder. So we truly believe in founder mode, which later, like earlier became a term, right? So we want the
Mhm.
company led by the founder, which is so important. We want to give the founder very well incentive. And also we
Wow.
keep,
Yeah.
yeah, so almost all our company grow like that. And then I think oftentimes we just wanted to ensure alignment. And then we wanted to, because we might have responsibility, other investors may want to rely on us in terms of accountability and the
Mhm.
ethical execution. So for the governance, we want to make sure the bottom line is set. And also we wanted to help the company with follow-on financing. And then we introduce, we do very often is to organize events. We have 5 events every
Mhm.
week actually every week for investor introductions, for business development, different domains. So we organize oftentimes, if it's a JP Morgan healthcare meeting in January, and then we will have a side event and have dinner event with all the CFOs of those large pharmaceutical company, and we have our portfolio company who want to target those CFOs. We will organize such kind of dinner, and then if we actually have a CES, we'll go there, and then we will have some sort of like consumer internet hardware event. So this is our responsibility, and that's how we spend our management fee. Yeah.
Very good.
Wow, that's very insightful. Thank you.
Yes, thank you
Good.
on that. Okay, so a comment from the galley. Lawrence, did you want to make a comment on something
yes.
about Hong Kong?
Just follow on with Sue's remarks. Yeah, thank you, Sue, for sharing. And actually, your point about Hong Kong is very interesting because you highlighted two of the hottest area in Hong Kong. One is talent attraction, and whereby academia actually are really coming to Hong Kong because they are really top talents. And not only that, because they will develop and nurture more top talents in Hong Kong. That is a double credit for those people coming to Hong Kong. The other part is the IPO. Indeed, IPO market in Hong Kong is very hot. At the moment, today, Hong Kong is the world #1 in IPO dollar terms as of now. And then we believe there are remarks saying that by the end of the year, Hong Kong probably will be the #1 IPO market in the world still. So we are hopeful about that.
Congrats. I think that's really great because I go to Hong Kong. I just went to Hong Kong in April. I mean, in April during Art Basel, where everybody went, and then we still go to Hong Kong in terms of market access and also crypto, because Hong Kong have very sophisticated monetary authority. So crypto and Web3 so friendly. The market is huge, and then also the policy. I think the Cyberport Hong Kong STP. So they actually incubated a lot of really good companies, and those companies potentially they wanted to target US market. So we still look at those companies, but they have to be global ready.
Yeah, indeed. Actually, companies from Hong Kong are coming out to the US and also international market. And follow on with the crypto market, digital asset. Hong Kong is really moving on with that. And we have the digital asset trading licenses already. And then everybody is talking about stable coin. As of 1st of August, Hong Kong has the legislation in place. And then anytime the authority will release or open up for license application for stable coins, everybody is looking into that.
Yeah, the market is huge.
Yeah.
Okay, so I know Carrie had a question about, and I'll just read it out unless you want to ask it yourself. So can't a Chinese Hong Kong company invest into Sue's fund via sending money from Hong Kong to the US? There's no currency restrictions between Hong Kong and the US.
It's very hard because I think the US company, they're not just look at the money, but also they're looking at the GP. So I think it's very hard in terms of a regulation. A lot of I think sophisticated GP. So they would just say, I'll ask them, hey, you have to file CFIUS. And they were like, that's okay. That's okay. Just file. Right? So that happens to Korean and also happen to Japanese conglomerates too. So they just file CFIUS and don't be afraid. It's just the extra costs. Just file.
Okay.
But because of that CFIUS, and then it just scare a lot of people away.
Yeah.
Yeah, just scare a lot of people away.
Any other thoughts before we round up? Yeah, Jen.
Yeah. My question is that following We's investment and We's success, is Amino Capital opportunities in the Asian market in the US, Asian Indian markets in the US, besides grocery delivery?
I think it's very interesting, right? So the underserved community happens, in grocery and also in others, parts as well, but maybe real estate, right? So, if you have a choice, I've seen like, oh, realtors, they are in different asset groups. I mean, they definitely wanted to purchase from their own people, right? Because they speak same language, they hang out together. So I'm looking forward to see more innovation in the same kind of logic, but in other sectors as well.
Thank you.
I would love to hear a little
So
bit more about sorry to chime in, but about Sue, how you've been able to recognize these winners early. You've touched a little bit upon that, but what you're doing is very difficult, and you've had such amazing success that I'd be remiss if I didn't double click in on that and how you've been able to pick these winners early.
Yeah, that's very interesting, and thank you so much for your question and what you said, the good words. I think it all comes to discipline. So when we actually look at the deal early, it's actually we look at two things. One thing is we wanted to have the best team in the whole world, so we're very disciplined on that. And then second of all, we wanted to actually invest in company that actually meet our investment criteria. So I think in Silicon Valley it's very like, just like Rebecca said, oh, you invest in data to Rebecca, that was nothing because people that actually from all the tech giants, like they all know about data flywheel. And Rebecca has been in this industry forever. So of course she knows. But when it comes to investments, a lot of people are investing in company not based on their first principle, but based on their passion.
So do you have to have a company will you invest in a pre-revenue company?
Almost 90% of our company pre-revenue.
Okay, okay, and then is there a point where they have to reach profitability or you'll cut them off?
So I think for growth stage, people that actually invest, follow on investments after us, they are looking at growth. So they don't look for profitability. That's
Okay.
why they never look for profitability.
So what kind of growth are you looking for on an annual basis then? Let's say once you did the seed company and then maybe you're doing Series A, and then what kind of growth annually you're looking for?
The growth has to be hyper growth, like right? So we became a unicorn because they had 600% year-over-year growth. So
I
we're
see.
looking at least the 200% year-over-year growth. So instead of 20%, right? So 20% is not enough for us.
Okay, and do you look how much do you factor in the burn rate, like if they're spending too much money or whatever?
Spending money is never a problem. Yeah. So we don't look at the burn rate. We look at growth. That's the only characteristics.
Okay, but you can grow real fast and also go through a lot of money too and end up bankrupt and not make it and collapse. So
Well, as long as your growth is, that's why I'm saying you have to have organic growth. And as you said, oh, my growth is based on advertising money, and then that's not organic. So that's why we want network effect. Once you have network effect, you don't have to rely on what you said. Oh, I'm spending 10 million a day for Facebook ads, TikTok ads, right? So my growth is based on zero marketing dollar or a little bit marketing dollar.
right. So I think
You won't bankrupt.
okay, so I think it's also interesting that you have this, you talked about the network effect, but you've got a community effect too, because you said you like to invest in immigrant founders.
Immigrant takes 60%, over 60% of high-tech jobs in the United States, in Silicon Valley. So it's inevitable to invest in immigrants. Matter of fact, almost 90% of our portfolio company, their team has immigrants. We love immigrants. We love. Yeah, we love them.
Well, I think it's been proven to be a successful model. and you're deep into that community. And so, wow, it's been really enlightening, Sue. Thank you so much. Yeah, and thank you all, everyone, for all the good questions. And Matten, Matten wants to ask another question. Okay, quickly, Matten, go ahead.
No, I just wanted us to round out Sue's way of looking at companies, because obviously you're investing early, you're investing before there's revenue in some cases, and you're still picking all these wonderful winners. And I just want to understand, what are the things that have made these companies stand out? Because you've gotten an incredible track record of picking these unicorns.
Yes. So as I mentioned, a lot of the investor, they probably in tech giants, right? But once they actually invest in company, that they invest out of their passion only. So a lot of them wanted to invest in healthcare. A lot of them want to invest in, semiconductor. But we believe in data driven. We believe in our first principle, which is really the data driven. So we don't invest just out of passion. So we don't invest in just our best friends. We don't invest in people just very nice to us, So I think you have to be disciplined to really be responsible of our money, our LP's money. So a lot of people, we actually learning a hard way, but we wanted to avoid, losing money by just say, oh, because this is a very famous professor, and we just give them so much. No. We love professor, but you have to have a really good data-driven. Along the way, you accumulate data, and also you have to take advantage of a network effect rather than just, spending S dollar.
What percentage of the companies that you see do you actually invest in? I know it's a really small percentage, but what is it?
Probably we look at we have a three pitch session. Each pitch session has 3 companies, so 9 companies every week. We were present in our investment committee. So we for the last 5 years we look at over 10,000 company.
And so you have a weekly
Wow.
meeting where they can come in and do a pitch. And it's
Yes,
a pitch session where each
three
one of them.
sessions.
Okay, that's interesting.
Tuesday, Thursday, Saturday.
Okay, interesting. That's good. I mean, I think that's a good strategy, actually.
We invested 300 company. So over the 13 years, probably, we talked to 10,000 companies.
How many of them have actually gone bust?
Gone bust, I would say, I would say probably so far, probably 20 companies went zero.
Okay.
Sometimes this company fail, but we can still get it acquired for maybe
Okay.
20 million. or
Yeah,
something.
so these unicorns, like how many of them, well, how many acquisitions have you had and how many IPOs?
IPO Chime Bank is our IPO one, but we have liquidity, well, not just from IPO, liquidity also from ICO or crypto. So we were first money, we started investing in crypto 2014. So we were early investor, first money into Almisi Gold, Definity, ICP. So those give us a lot of liquidity. And also we have acquisition, we have over 50 acquisitions already. Yeah.
And are these from Silicon Valley companies primarily?
Yeah, so it's just very hard, as I said, very hard for us to compete with European local US dollar fund or Indian local US dollar fund. So almost 90% of our company in Silicon Valley. I
see. Okay. Very good. So thank you so much.
Thank you, Rebecca. You asked the hardest questions.
No, I'm sure you've been asked much harder questions than this by your LPs, and but it seems like you're doing a good job of finding those gems out there and helping them to grow. And I think everyone on this platform recognizes that. So we will be posting the recording, and we wish you well.
Thank you, Rebecca. It's a great honor. Yeah, your guest is also awesome. Yeah, I love your guests.
Yeah. Okay. All right. Thank you again. Take care.
All
Bye-bye.
right.
Thank
Okay.
you,
Thank you,
Sue.
Sue. Thank you,
Bye.
Rebecca.
Yeah, you're welcome.
Thank you.